Markets is status quo. Kunal, hi, morning. The base, of course, seems now defined at 25,000, but what next on the upside?
Yeah, some bit of volatility which was there yesterday, first half, where you saw the index down 350 points on the Bank Nifty, and for no reason, because the markets prior a couple of days back had recovered from the US markets, and there was no major change of stance in terms of open interest. The put call ratio till day before yesterday was also above the 1 mark for both the Nifty as well as for the Bank Nifty. So it was a bit of a surprise to see the intraday correction for the indices, but then the recovery in the last half an hour, last 1 hour for the markets just set up the tone that maybe this could be a bit of a churn within the markets, and that could be across sectors as well as individual stocks. We're still holding net above that 25,000 mark for the index, and I think that's a more important sign to look out for. So I believe in that aspect, it's more like a buy on dips market. The indicators for the indices, both the Nifty as well as for the Bank Nifty, they're still on a positive terrain. So it's just that absorbing volatility is the name of the game. The bigger aspect for the markets right now is that 2 days back or maybe a 1 week back, the IndiaVIX was almost at 10. We are now almost at 11 to 11.25 for the IndiaVIX. So the base has shifted slightly higher. An incremental rise in the IndiaVIX, even if it's marginal, I think that leads to intraday volatility for the indices, something which maybe the markets would not have been accustomed to in the previous leg of this 500, 700 point rally.
Kunal, do you look at the FI long position, because they've marginally come down, but despite the fact that we now have a new base at 25,000, the shorts are continuing to be there in the system actually.
Yeah, so I think Sanjeev, we were discussing about this point that if FI positions were 93%, 94% negative, and if the quantum of this negativity is very high, so I think it's on the short sides around 2 lakh contracts in terms of numbers, and percentage-wise, of course, 93, 94%. But then to hold this position for the last 3 months, and the index still trading at 25,000 mark, you try to question that what is the importance of this number? Because if I'm short by a huge margin, I mean as in FII, then I would probably, my expectation that market should not be flat for the last 2-3 months or trading in a band of 500 points plus minus 25,000 mark. It has to either fall down drastically. So how long can the short position hold? And historically we've done this analysis also, I think sometime back, that whenever the number of or the quantum of the short positions is very high, skewed towards one side, the markets have actually reversed. So the bigger question over there is that if I am 93% short, I mean in terms of the FI numbers, the markets are still flat.
Yeah, and it's a contrarian position they're holding, and this is bound to be, if there's a bounce back, then there's a huge short covering that's going to come in because of that.
On an average, we've seen historically that 60% to 40% is the ratio bias, depends on which side the markets are. So there have been instances where the tilt on the long side was around 70%, 75%, and 20-25% on the short side. But then those were those extreme scenarios. Right now also it's an extreme scenario, but the concern is that last 3 months we've seen the same number.
True.
The quantum, and the markets have not done anything relatively.
So it will continue to be the same.
So if it continues to be the same, the markets will be range bound. And if there is any kind of a direction which starts off, you will see a drastic cut in the short positions. So I think the number could probably give us a trigger. My only point which I am saying, Aisha, is that even with such a short position, the markets are not falling down. Right? And if the market starts to show any signs of recovery, say fundamental news flow, etc., then you will see a massive unwinding of short positions. That will trigger the next uptrend.
Fingers crossed to that moment.
Exactly.
But tell me, what's your stock bias like, Kunal?
So I'll go with a few large cap names over here. HDFC Bank is something which is coming back into the radar in terms of a potential buy. And my sense is that the stock is now placed very aptly for a reversal or a continuation breakout. Over the last 4 or 5 days, we've seen minor candlestick patterns. We call it doji kind of patterns for HDFC Bank. But then I think the stock closing just around that 990 odd mark looks to be an attractive trade. Would go for a contra buy over here with a target of 990.95 for HDFC Bank. Stop loss could be kept at 962. The second stock which I would be betting on could be Samadha Madhasan. That's an interesting chart. I think yesterday also we saw the stock coming into a trend line breakout, almost like a 10% correction prior to this, but then after breakout of 105 levels, would look out for 108 as a target, stop loss at 102.
Okay, with that, let's slip into a very, very short break. On the other side, we'll